You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Swan Global Investments. Since 1997, Swan has been the leader in hedged equity and option income strategies with GIPS verified results. Swan provides unique and valuable solutions to the inherent weaknesses of asset allocation, offering defined risk strategies that allow upside participation while also protecting advisors and investors against market risk. For more information about our advisor program for separately managed accounts, Swan Defined Risk Mutual Funds, or our proprietary option overlay strategies, please contact Randy Swan at swanglobalinvestments.com. Think outside the style box. Think Swan when deciding on risk management solutions to market risk. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. The Advisor's Option is also brought to you by Northern Trust Capital Markets, offering a unique blend of transparent trading, quality execution, and smart liquidity solutions across institutional brokerage, transition management, securities lending, and foreign exchange. Northern Trust's options offering includes quiet access to non-traditional pockets of liquidity, with hands-on support from experienced traders to customize your trading strategy, combined with the peace of mind that comes with trading through a stable and globally respected firm. To learn more, contact John Cherry at John_Cherry, spelled like the fruit, at ntrs.com. or visit northerntrust.com/capital markets. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
Welcome back to the Advisor's Option, the program here on the old Options Insider Radio Network. where we break down the sometimes scary, sometimes impenetrable, sometimes just intimidating world of options for you. The busy financial advisor, asset manager, RIA, maybe you're looking to add options to your clients' portfolios. Maybe you've already done that. Maybe you dipped those toes in those waters and you need a little help to take the next step. Either way, we've got you covered. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we hope so, Options Insider Radio Network. If I sound a little bit different, it's because I'm not coming to you from our studio in Chicago. No, I'm actually a few blocks away at the Swan Wealth Advisor Forum here 2019 in Chicago, and I'm pleased to be joined by one regular on the program and one old friend, even though he hasn't been on in a while. First off, he is, of course, the Director of Risk, Mr. Chris Hausman, also known as the Portfolio Manager at Swan, but that's nowhere near as fun. He is the Director of Risk. Chris, welcome back to the Advisor's Options, sir.
Mark, always a pleasure. Usually I give you the Puerto Rico weather update, and I can't do that.
Yeah,
I'll give you a Chicago one, though. It's cold and rainy.
It's cold and rainy. Yes, clearly you brought the fine Puerto Rico weather with you here to sunny Chicago, where we're having blizzards in late April, which is, unseasonable for us, even here. And also joining us here in the Windy City, we have Mark Odo, the Client Portfolio Manager over there at Swan Global Investments. Mark, welcome back to the program. It has been a while, sir.
Been too long is what it's been.
It has been too long. So let's talk about the reason we are all gathered here around this fine table here in this fine establishment. We're deferring fine quality beverages just for you, the listeners, so you guys can get your own taste of what's been going on here. Of course, I mentioned we are here recording at the Swan Advisor Forum 2019. We're just talking about before the show. This is actually the fourth year you guys have been doing this. You started it off in Puerto Rico. Then I think really to be more convenient to my schedule, you moved it to a few blocks away from our studio. So I thank you for that. Now the third year running here in Chicago. But let's start. Maybe we have some new listeners who haven't heard the previous episodes. Maybe they haven't attended an event in the past. Give our listeners an overview. Maybe Mark, will start with you. An overview of what this event is, what the goal is, what you're trying to do with these advisor forums.
Sure, be happy to. Yeah, so this is our fourth annual conference here, and what we're trying to do is address the needs of a lot of different players in the industry. Last couple of years, it's been at the more institutional level, people who are dealing with endowments, foundations, huge pools of capital. This year, we decided to shift our focus a little bit. We designed this seminar series around financial advisors. But the thing is that everyone is still dealing with the same fundamental problems. Everyone's wondering, which inning are we in when it comes to the bull market here? One of the best things I heard today was that we're actually in extra innings. We're in the 14th or 15th inning.
I did like that. Yeah, I thought that was good.
Yeah, and I think you can make a case for that. I mean, I think a lot of people have also been kind of concerned with what they've seen in the last 6 months, where the markets, it finally looked like that bull market was out of gas. We weren't going to hit that 10 years. And then what happened? The Powell pivot, the Powell put, the Fed put still active. And where are we today? Well, the market's recovered all of its losses. So I think people are grateful for that, but everyone is still wondering, if and when the downturn finally comes, are we prepared to deal with it? Both from an investment standpoint and with the case of our attendees here, practice management. I mean, a lot of these people have now moved to the fee-based model where their compensation is tied to the absolute level of assets. And, if we have another major downturn, what does that do to their business?
Yeah, and just anecdotally, I mean, I've been coming to these since the inception, really. It seems like you had a stronger turnout than ever. It seemed like the room was pretty much packed to the gills, standing room only in the back there.
It was. This is our largest turnout ever. We had over 100 people, and we had a waiting list of about 2 or 3 dozen people that we had to turn away.
I was joking with your team. I have to move it to McCormick Place next year. Just if it keeps up this growth rate, the massive convention center here.
Maybe we can take one side with the car convention.
Yeah, there you go. Like take off half the auto show, half for the Swan Forum. I think you're on the trajectory for that. But Chris, you were up there too. Kind of give us your thoughts on kind of in general the purpose of this event and maybe any interesting takeaways you might have. Then we'll dive into some of the individual sessions and speakers and some of the interesting takeaways from those.
Yeah, it was a different crowd. The last few years have been geared towards CIOs. And like Mark said, I think we started to focus more on what are the issues they're having with their clients at this point in time. There's a lot of worry out there. Volatility is still here, even though we may go through periods of low vol and people forget about it, but it still creeps back into the equation every once in a while. So one of the things I wanted to get across everybody is, hey, educate your client, which is one of the things that you do a great job of, because if their clients are educated, then they'll be able to lay down an objective in what they want to do with their portfolios. And one of the main things that we did today was offer not just our defined risk strategies here, but a multiple overlay strategies, solutions, all these other things that we can do and customize portfolios for people.
And Mark, I hear you're kind of the man behind the strings, pulling the strings to set up a lot of this event here today, planning the content and things. What are some of your general takeaways from the event this year?
Well, I think one of the things that we did really well with the event here was put together things that were really relevant to these financial advisors. I mean, being a financial advisor in today's industry, it's a tough job. You have to do a lot of things well, especially when so many people view something that you can do on your phone as a viable alternative. So you have to have good technology, you have to have good communication, you have to do the handholding, you have to pick good investments. So I think a lot of these financial advisors are trying to figure out, well, what are my core competencies? What do I really focus on, and then what can I offload? And we gave some people some ideas for that. Now, another thing that's been really interesting is okay, well, when it comes to being a financial advisor, what is their cycle? I mean, are they close to retirement? If I am close to retirement, how do I monetize my business when it's time to retire? If I'm younger and starting out, well, how do I acquire assets? So we actually had some interesting speakers who that's their business. They're a matchmaker, essentially, of connecting buyers and sellers when it comes to financial advisory practice. And of course, there's some of the other things that people are concerned with is well, as we were talking about, what if the markets have a major sell-off? What if all of a sudden I can't count on that steady growth in AUM just due to the market? And what if I'm actually, fighting that type of AUM sell-off due to market movement, something I can't control? Later on, while we had some really interesting speakers talk about what the Fed was doing and how much of this market was being driven by central banks around the world. It's funny, she was even of the opinion that the Fed's been wrong in supporting this market for so long.
Yeah, she wasn't a big, shall we say, cheerleader for Greenspan and a lot of the recent Fed chairmen. She was not exactly, shall we say, a huge fan of.
That is correct. Very, very interesting inside baseball we got from Danielle there.
And let's just kind of go in order a little bit here, because we have some of the panel sessions we're going to put out to our network. Some of our listeners can hear those for themselves, but maybe we'll do some kind of general takeaways. Like, for example, the first one kind of speaks to this directly. Top 10, easy for me to say. Top 10 trends for RIAs. What were some of the hot trends for RIAs this year, Mark? Matt was on the panel. You're Mark.
Well, certainly some of the trends are this idea of fee compression. That's something that a lot of people are facing. How do you manage that? This idea of fighting off the robo-advisors, coming up with solutions. And again, what is something that you're really good at? One of the interesting insights we got from this is that the one thing that can't be replicated, or commoditized, I guess I should say, is that human touch. So some of these advisors are actually looking for liberal arts majors. They don't want some other nerd like me or House here who are, good at all the math. They want someone who's better with the people and the emotions and all the behavioral finance elements that we know are coming up. So yeah, we had some really interesting thoughts that were shared by our panel.
I think fighting back against the robots is an interesting theme. That could even be a whole panel session, I think, next year. We talked about it on the show a lot, and it comes through our bailiwick quite a bit, because I've often seen kind of you talking about kind of the high touch element is a good counterpoint to the robots. Well, options fit very well into that space in terms of the things that, obviously if you walk into a wirehouse and you're a 60-40 or maybe a 60-30-10 client, the robots can pretty much effectively do that right now. It's pretty easy. That business is going away. You have to have some sort of value add to kind of take you to the next level, right? To maintain and even grow those AUM, and that's where I think options come in. So who knows? I'm planting a little hint, a little seed for next year's event there. Fighting the robots using options. I think people would sit in for an event. I see Chris, he's chuckling. I think you're down with that, Chris.
I would agree. I think that's one of the big themes. It goes back to robotic decision making. That's fine. It's like the car that's learning how to drive for the first time. It's going to fall off a cliff once, maybe twice, and I don't think people want to experience that. Well, obviously in real life, and not with their financial wealth. So that's one of the things. What we're trying to do is alter that return distribution and make sure that they don't have to go through that.
And I had a chance, because we were doing some recording in the morning, but I had a chance to come in around the 9:15 session. And that was interesting. I mean, it's not the sexiest topic in the world, succession. People won't say, "Oh, let's race to talk about succession," but it is one of those things where, of course, it's very relevant to this audience. I thought there was some really interesting conversation there. Particularly, I thought David Shepard, where he was talking about some of these ancillary ways to generate these revenue streams that I'm sure a lot of the advisors in the room had never even thought of. Things like these real estate deals and putting them into REITs. I thought that was a pretty fascinating session. Did that one resonate with you, Mark?
Yeah, certainly. Well, we got lots of different perspectives there. We had a gentleman up there who had started in this business and has grown his practice. So I think he's up to, 400 million now, AUM, but strictly through acquisitions, 30 million. Look, the thing is, your average financial advisor is getting to that point where he is thinking about his own retirement or her own retirement. And one of the things I heard on that thing is, look, essentially what these guys are looking for is the 20 or 25-year-old younger version of themselves. That's who they want to sell to. That's who they trust. So there certainly are organizations who are out there who are, matchmakers who are putting together those types of deals. But then there's someone like David Shepard up there who's operating at a higher level and putting together deals that really cater to the 1% or maybe even the 1% of the 1%.
Yeah, he was talking Gates Foundation and then the Saudis and a number of different. You're right, the top echelon of the 1%, shall we say. Then, of course, we mentioned earlier the speech from Danielle DiMartino Booth. She had the book Fed Up, I believe it was called.
Yes, Fed Up.
And she was no fan of the recent Fed regimes. I encourage you listeners, if you get a chance, to check that one out on the network, because I think our synopsis won't do it justice. It was a pretty lively conversation.
Yeah, the thing I really liked about Danielle, I think she shared a lot of the perspective that I have. And look, if you've been in this business for a long time, you believe in certain things. You believe that there should be some fundamental truths that drive valuations, that drive price, and that drive markets. And what we've seen is that us people who are focused on fundamentals have had our world, turned upside down. We're being all the rules have been flip-flopped when we have these massive interventions in the trillions of dollars, and that the markets aren't what they should be because you have these outside players forcing things down our throats, usually for political reasons, and that's frustrating. It makes you angry when there's something that you really truly believe in that is being overridden by like Danielle was talking about there. Hence the title Fed Up. I'm looking forward to reading that book.
Then we have a couple of sessions. I think we can just skip these because they featured some guy who was titled the Director of Risk. I don't think we need to really talk about those too much. But Chris, obviously you spent some time on stage today kind of giving the practical perspective in terms of implementing the strategy and implementing hedging and kind of talking about the, shall we say, turbulent waters we've had since the last time we all gathered here together in terms of what it's been like managing the overlay in those environments. Give our audience a little bit of a snapshot of what you were talking about up there.
Yeah, so that was a deeper dive into the defined risk strategy. And of course, 2018 is still fresh in people's minds because of how unique it was with the volatility event in the first quarter and then the lack of vol in Q2, Q3, and then all of a sudden a 20% drought on the marketplace in the last quarter. So it was pretty eventful. I don't think people have forgotten about that. And the whole purpose was really just to go through the pieces of the defined risk strategy and how they work together in conjunction and how we're managing risk on a holistic basis and trying to provide this smooth return, this glide path, if you will, what the defined risk strategy was built for in the first place. And that we're going to have volatile times. They're not going away. We talked about VIX spikes. You talk about it on your other shows all the time. And that's something that we have to deal with and everybody else has to deal with. But that's part of the strategy and how we've evolved over years. If you look at the options-based strategy, there aren't too many there that started out 20 years ago like we did. So that's a differentiating factor. And then we're taking that experience now and then, customizing overlays and doing all these other unique strategies for clients, because not all clients have the same need, and we've learned that through managing all these mutual funds and all these other products that we've had over the last few years.
And speaking of other products, you guys kind of mentioned up there on stage that obviously the primary one is the equity overlay, but you're doing it on other products and particularly something like gold, which has had kind of a bit of a pronounced downturn, shall we say, over the last 6 months to a year or so. Walk our listeners through maybe some of the challenges or differences of implementing it on a commodity-based one like gold, which is kind of, I think, experiencing, as they say, the full market cycle right now, versus something like equities where we're in these weird vacillations right now. We're gapping up, we're gapping down, we're sitting sideways. It's a very different market environment.
Yeah, I mean, the positive thing is it shows how the defined risk strategy works in a full market cycle. Unfortunately, we're battling with a 10-year bull market. We have not really been able to show people how this works once we do enter a real bear market. So the process is intact, and that's through gold and the commodities. It's the same process, so we don't really deviate from what we're doing on the equity side, but it's proof to the pudding, if anything. So it's a positive thing to show, look, if we ever do enter, or when we do enter that full market cycle in equities, then this is kind of what you should be expecting.
And it seemed like a lot of the audience, when I was just gauging their reaction to your sessions, they were asking a lot of questions. It seemed like a lot of them handled the hedge part pretty well. They can wrap their heads around that. It seemed like a lot of the questions are, again, how do you construct the income portion? How do you do this? How do you choose the strike? How do you choose that seemed like where a lot of the focus was. Is that kind of what you expected? And was that kind of what you were planning to discuss here?
That's what I expected, because that's been the most challenging piece of everything else is pretty straightforward, almost semi-passive in a way. So the income component, with the volatility spikes, that we've been dealing with has been challenging. There's no question. I mean, shorting volatility is not what it used to be. Whether markets have changed or they're just cycling, but we've kind of been through this before, so we just have to get through it. And it's part of evolving and making sure that, shorting premium just isn't about selling strangles all the time. I mean, there's premium selling through calls only or puts only, and then we're using those tactics to kind of improve the process and be a little bit more cognizant of what volatility is doing and where the marketplace is going. And really, alpha, that may have been the primary alpha generator for years, but there's other areas where alpha can be generated. And it's just a matter of assessing risk and seeing what you need to do in other areas, whether it's through credit spreads or flies or condors. And these are strategies that we've actually been doing this entire time. They've been a small part. And I think all we're doing is, okay, maybe we need to tap into those a little bit more, be more cognizant of what risk is showing us and what, at the end of the day, what clients want, right? I mean, you give them a risk profile, and this is why we have all these other products. It's like a menu, well, which one do you want? And I use the analogy, right? You talk to 10 traders, you talk to more traders than anybody else I know, you're going to get 10 different versions and answers.
At least the same guy might change his mind halfway during the conversation.
That's a great example, because they're evolving, right? No strategy on the option side works in all markets. And I think we have this tendency that we want to find the holy grail. We want to find that one strategy that works in all markets, and I haven't quite found it. And I keep, when Matt's on the show, I keep telling him, when's he just going to provide us the button?
Yeah.
What strategy do I do, Matt?
This works 88% of the time.
Right now under these conditions. Yeah. But be aware of these changing factors, because then you got to switch to another strategy. And so that's all we're doing, and that's been trading. All of us have been doing this for 20, 25 years plus, and that has been, it's always been part of the process.
Yeah, it's definitely one of those environments where I think to put it fairly, you have to be a little bit more nuanced when you're harvesting the quote-unquote risk premium these days, right? You're right. The old days of just hit the bid on the strangle, move on to something else. Mm-hmm. It's not there anymore. On top of that, the spikes that are there to be harvested, we discussed this before, are so short-lived now. They're there. It used to be you could rely on them for a few sessions, maybe a week, a couple of weeks. Now it's hours. And if you don't catch it at the right moment, you missed your opportunity for weeks or maybe months to come. So yeah, it's definitely a much more, I think, nuanced is the right descriptive term for it. So yeah, that was some interesting sessions. I encourage our listeners to check those out. If you haven't had enough of the director of risk already on this program, there's more waiting for you there on those panels. And then Mark, we moved on to some other sessions about mixing it up a little bit here, which I thought was kind of interesting. In addition to next year's big panel about options versus robots, which I'm looking forward to. But goals-based investing, and also kind of a bit of a CIO roundtable looking at different perspectives in the space. So maybe walk us through those and some interesting takeaways you found from those sessions.
Yeah, well, I think lots of the financial advisors are struggling with setting expectations in this rising market, and then there's different elements to that. I mean, when people turn on CNBC and they see the markets up, and they think that their account should also be setting all-time highs. So they're dealing with that. There's this concept out there, there's this idea that you have to outperform the market to win. Right? Well, this whole idea of goals-based investing is like, well, no, let's dial this back. What do you, as the investor, the individual investor, what is it that you really need? And as I was listening to some of these different conversations, I was thinking about Easter Sunday. I was having dinner with my future father-in-law here, and he was talking about his financial plan. And again, his major complaint was he was not beating the market. And he does not need to beat the market. So I started talking to him and said, Bob, all right, what do you really need your portfolio to do for you at this stage of your life and with your family and everything? He had no clue. He had no idea. The only metric of success he had was outperforming the market.
He watches CNBC and he said, I need to beat that.
Yeah.
I think one of the speakers said it today, some of the best advice I heard today. If you have CNBC on in the room, turn it down, mute it. If you learned nothing else today, if you came away from nothing else, I think that was a gem. But you're right, people have these strange, perhaps irrational goals for their portfolios.
Yeah, and multiply that, gentlemen, by the millions of other baby boomers, retired baby boomers out there, and that is what all these financial advisors are struggling with, is trying to get people to focus on what is your real goal for your money here. And I think that the other thing is that all these other solutions, which we think are great, whether it's some sort of option premium income program, whether it's a hedging strategy, most of those types of things are probably not going to outperform the straight up S&P 500 most of the time. There's going to be other environments where they really step up and do what they need to do to protect people. But if you're just comparing versus the S&P 500, you've already set yourself up for failure. And it's something that we as an options manager have to do, is try to manage expectations correctly. And for these financial advisors, getting back to people focusing on their goals rather than outperforming the benchmark is probably one of the biggest struggles they all face.
And then we kind of wrapped up the day with the annual appearance now of Randy and Rob kind of talking about some of the history of the DRS, answering some more questions kind of along the lines of what Chris was answering earlier about, when to implement the hedge, when to implement the premium harvesting, that sort of thing. Any interesting nuggets from those final sessions of the day there?
I think the most interesting things was just to kind of go back in time and then let people know that these guys have been there before. Having ran the strategy for over 20 years, they've seen just about everything under the sun. And even though you might have an experience like the fourth quarter of 2018 where the market's down, you're getting some pain, you're getting some downside, all you got to do is get through that. This is a very long-term strategy. Most people who've been in this business for 20 plus years have been in the business for that long for a reason, right? They know what they're doing. So you can't hit that panic button and sell on Christmas Eve of 2018. Otherwise, you're shooting yourself in both feet.
Oh, you both didn't just buy with both hands on Christmas Christmas Eve day. That was didn't we all do that day? That was it worked out so well for all of us. Well, interesting stuff, Chris. And I know you were on a bunch of the different sessions today. Any kind of last takeaways for the event before I make Mark break down all of his latest research for us?
Well, I think the turnout is a statement, and that we had to turn people away. There's a real need for something that's going to alter the distribution of your returns, because typical asset allocation just isn't getting it done. And I think more and more people are getting more and more concerned. Stock market's at all-time highs. Why? Because of the buybacks. Why? Because of all the Federal Reserve and central bank actions over the last few years on a worldwide basis. And I think more and more people are actually getting nervous about that at some point, this is going to end, and it probably won't end very nicely.
Very rarely, if ever, it does. Mark, we've kind of been the planning for this. We mentioned it's kind of been standing room only. Have you thought, obviously just wrapping up this year, so maybe you don't even want to think about next year yet, but have you thought about maybe expanding it to a couple of days and having, more sessions? I know some of the events in the past, not yours, but others we've seen that are aimed at similar audiences that have incorporated maybe like an education day too, where like here, the first day people come in, if they want the what's a call, what's a put kind of audience, they could have that day, and then you can lead into the second day, which is getting into the premium harvesting, the nuances, options versus robots, all that other fun stuff you want to cover next year. I'm just curious, is that something you guys have considered?
Funny you should mention, yeah. I actually wasn't going to bring that up, but we have been developing a modular-based type protocol that's maybe, call it 10 seminars long that talk about all those things. And we're going to start off with a very basic options 101, what is a put, what is a call type thing, and go up the ladder. We'll talk about, okay, what are these Greeks, what is the Black Scholes, so on and so forth, and give people all sorts of different perspectives. The idea here is that this will be available maybe as a one-day session, but we might break this out into videos or something like that, because the hunger for that knowledge, as Chris pointed out, is vast. It's almost insatiable. But let's be honest, a lot of people who don't deal with this on a day-to-day basis, probably most of our audience, last time they looked at options when they took their Series 7, right? So
let's be frank, that's not exactly a comprehensive overview
not really.
of options on the Series 7.
Yeah, so that's something that we have going on. The other thing that I'd like to talk about is some of our research. Chris and I have collaborated on 2 white papers recently within the last, 12 months or so, that I think would be really relevant to your listeners. The first one is called Know What You Own. Okay. Now, this particular one takes a look at the options-based category out there. Now, as everyone knows, that category in Morningstar of 40 Act open-ended mutual funds and ETFs has been growing at a great clip lately. But the problem is that not all these are equal. People lump all these things together just because they use options. And kind of the joke I like to make is like, look, no one just lumps every single stock fund together because they own stocks, right? It's really what is the strategic objective here? What are these things intended to do? So we break it out into kind of the three standard different concepts: hedging, income, and alpha. But then say like, look, if you're going to look at these different managers and perform your due diligence, you don't want to do it yourself, but you still want options in your portfolio, but third-party manager, what are the questions you should be asking here? As you go through your due diligence process, what are the risks? Who should you be hiring and why? So that one I like a lot, and that one's one of the ones we have. It's called Know What You Own. And the other one I believe is called Learning from the Mistakes of Others, or something along that lines. And it's kind of a tie in there because it talks about some of the unfortunate blow-ups that have happened into this space. Again, another kind of problem with people's perception of options is that they are inherently risky, that they're all going to destroy you and lose 80% of your capital. And really what we've come back to is like, look, there's three key things that you need to be really truly worried about: liquidity, leverage, and risk controls. I mean, that's where you lose money, right? So we kind of go through that and say, look, these are the things that you really should be focused on, and not just throw the baby out with the bathwater and never invest in options ever.
Yeah, I think the first one you mentioned, that kind of resonates with me. That's a topic we've hit on many times on this show. I've jokingly referred to it over the years as the alts ghetto. They throw everything in there, and it's just whatever's in there. And it's, you could have, a managed futures fund next to an options income fund, next to things that are just some guy who just like a REIT, some guy who's, just a
weird credit products.
Yeah, it's just a mess of a mismatch of nonsense. And you're right, and they break it down a little bit more on the Morningstar side, but still, you're right. It's just if they involve some sort of options capacity, there you go. That's pretty much the barrier to entry to get in. So I think there definitely needs to be a lot of work on that front to try to segment and make things a little bit more resonant and reasonable from that perspective. Interesting. A lot of interesting stuff. I want to get you on the show more often so we could kind of break down some of your different. We could probably spend a whole other show on the funds of late that have had, shall we say, troubles since February of last year. Go figure. When you're long 1, short 8. That strategy may not work out well when VIX spikes and everything else is hitting the fan out there. But hey, we all learn these things the hard way sometimes, it seems like. Well, this has kind of been fascinating. I know you guys want to get to some beverages. I could probably use a beverage or two for my throat. But maybe we'll do some final thoughts. Maybe Chris will start with you. This is kind of like the Swan Forum is kind of like the culmination of all your 10th box and everything that you guys kind of do throughout the year. So any last thoughts here on your big Chicago event before you and I are going to see each other again in a couple of days down in OIC. So till the next time you and I get together.
I get to relax for that one, actually.
You do. I'll be doing a lot more of this while you'll be hanging out in the cabanas.
Yeah, there you go. I get to sit back. So again, it goes back to the turnout, and I was very pleased and actually surprised. I didn't know how many people were going to show up to this thing because it was almost double the size of what we've had in the past. So again, it really is a testament to people are thirsty for this knowledge, like Mark said earlier, and we need to provide that to them and make sure that they learn about options the right way and can control those risks, and that it's meeting their objectives at the end of the day.
And Mark, this is kind of your baby here. So first off, congrats on birthing. It looks like a pretty healthy baby here, and maybe some interesting thoughts and maybe some plans for the future here. And if our listeners are intrigued by this recording, maybe some of the panel sessions they heard recorded, maybe they want to attend a future, either one of these or perhaps one of the 10th box events. Where should they go? What should they do?
Yeah, well, we are considering even having a second one this year. That might be how we meet the demand for this thing, is having a follow-up one in the autumn. We'll see. Certainly it's something we tend to do again next year. You can always go to swanglobalinvestments.com and find all of our white papers, research, blog posts, all that stuff. And as I mentioned, we hope to have some videos out there that help kind of establish the fundamentals in options trading. I mean, those are all things that, well, quite honestly, keep me employed. So I'm cranking that stuff out as much as I can. The other thing I'd like to do is kind kind of reinforce what Chris said here regarding the validation here. Not only were we kind of validated by having a full house and the waiting list and everything like that, the other thing I noticed was everyone was snapping pictures of the slides with their cell phones. I mean, yeah, it almost felt like I was at a concert where people keep snapping pictures of the art, the performers up there, because that tells me that whatever it was that we were putting up there on the screens is relevant.
That's a good sign. They weren't just posting on Twitter, right, or checking their Facebook feed. They were actually taking it in the data, which is a good sign in this day and age. Well, Mark and Director of Risk, I'm glad we could get together here to discuss all this fun stuff, and I look forward to chatting again soon. Mark, we'll have to make it more often than once a year. We bring you back on the show to discuss all the content, and I look forward to maybe even seeing one of these again pretty soon.
Great,
thank you.
All right, thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.